Yeah, we are not surprised by the profit. I would say that as you see that there was more stability in the capital markets in the third quarter, and as you see that the COVID impact has been lower, then clearly we're going back to the normalized level, more or less, of performance that you might expect from Allianz. So the results are totally logical because our underlying performance is very strong. When you look at the combined ratio, we had a combined ratio 94.5. If you adjust for the COVID impact in the third quarter, it's slightly below 94. So that's what we expect. And this is also putting us on track to get to 93 next year. On the life side, you see very stable results. Market have been stable, and when we have stable markets, you're going to see also a nice profitability coming from the life operations. And then in asset management, you can see also a strong results supported also by net inflow. So at the end of the day, that's exactly the results that we would expect in this kind of environment, and adjusted for COVID, the numbers would have been even slightly higher.
But Giulio, as we looked at the second quarter, there were three things that we registered. One, that demand for car and travel insurance had fallen. And secondly, that there was a significant pickup in business interruption claims. And obviously that had some impact on the key combined ratio. Can I ask you, as we see Europe go into further lockdowns right now and a so-called second wave, do you see those things coming back into play at all? You seem to be much more confident that these issues will not be a bigger deal this time round.
Yeah, we see we have lockdowns currently basically throughout Europe. What we see right now anyway, these lockdowns, they don't have the same significance as in the spring. So from that point of view, they are more selective. Also, our exposure is being reduced. So from that point of view, what we're going to see right now is going to be very different from what we saw with the first wave of lockdown. So from that point of view, we might have some impact, but that shouldn't be at all significant as we had in the spring. So from that point of view, you know, we are definitely more confident, but I wouldn't say that we cannot exclude that we are going to have some impact because of that. On the issue, by the way, of the revenue, that's also important. We are working very hard on the expense side, and as you see, our expense ratio has improved in Q3 of this year compared to last year. So yes, there might be some pressure in some lines of business on the revenue, but on the other side, we are working very, very hard on preserving margin and try to get productivity gains also in this environment.